What's good, digital hustlers, man? I am back with another video. And as y'all can see, man, on the channel currently we have 19.4 thousand subscribers on the Digital Hustlers channel. Just posted a video an hour ago. We are at 60 views right now. Going up. It's actually a remake of the first ever, well, not first video, but one of my videos that has the top views, as y'all can see. Posted it 9 months ago, and I had 355,000 views on there. So had to double back, make another one. On the trading channel, we currently have 38 subscribers. I think we're touching about 200 views. Oh, we're finna touch 100 views. So I appreciate y'all for that, man. You know, I know this is gonna be a journey. Plus, I'm just showing y'all, hey, man, the journey to my really 5-figure mark trading, then 6 figures, and 7, and 8. Y'all know the rest, man. We're gonna keep going. However, in this video, what I'm gonna be talking to y'all about is why you should trade with the banks. Alright. So I'm gonna go over here to a blank. Let's see. Something that I'm not using. I'm in this trade right now currently. Hopefully it breaks these. I didn't take this, but hopefully it breaks all of these up here, shoots up there. It's like 26 pips, so it's not a lot by any means. I just, like, as y'all can see, this too. I'm in GBP AUD. Like, AUDs have a weird tendency of moving very, very, not fast, but it's like they move at like very weird spots. Like, this is a weird spot to reject from, but it's possible. So just got to be careful with that. Hopefully it breaks this low here, and then we're going to continue down. Right now I am looking at a 1 to 11. So in other words, basically putting $10 to make 110, putting $1,000 to make 11K, so on and so forth. Same thing with this one, only that this one is a 1 to 10. So $10 to make 100, 1,000 to make 10K. All right. So this is basically what smart money is. All right. So smart money is trading with the banks, seeing where it's more volatile at, where's the institutional candles, where liquidity being taken. And if you don't know what none of these phrases or what I'm basically explaining mean, that is one reason why you should definitely subscribe to the channel, because there's a lot of information with this trading game. When I explain it to people, they understand it so fast and so well, because I mean, shoot, I'm only like what three years in the game, and I still have like those memories of me starting off and having the same question that some other people may be having. So yeah, man. So smart money, like I said, right? Let me go ahead and come over here to a bit blank space. All right, currently discussing the next clothing brand drop with my graphic designer right now. This is from a trading channel, but if we have any people that have a clothing brand watching this right now, you need a graphic designer, hit my DMs, man. I got you with mine, bro, certified, no cap. All right, so what is smart money to me? All right, so this is what smart money is to me. I don't care what any other information is out there. Like I said, I've been trading for about 2 to 3 years now. So this is what I get from it. So basically what smart money is to me. Yeah, it is too. All right. So smart money is recognizing where the banks are invested in and riding the trend with them. All right. So this is basically what smart money is, right? Recognizing where the banks are invested in and riding the trend with them. So this is usually off institutional candles. L spelling. I already know. Oh, I spelled it right. All right, institutional candles, supply, Pretty sure I heard some of these before. Supply, and demand, order blocks. I don't know if I don't use some of these other ones. I use institutional candles, supply and demand in the sense, but like order blocks and I feel like there's another one. Oh, liquidity. I use liquidity also. L spelling. All right, liquidity. All right. So there's probably more, but basically, what smart money is to me is recognizing where the banks are invested in and riding the trend with them. And this could be off institutional candles, supply and demand zones, order blocks, and liquidity. All right. So with that being said, what the banks usually do is they have the masses do one thing while they drive price the other way. I apologize for the slow typing the other way. But I know some people are visual learners. So I feel like me, typing this out is going to be way better than me just talking. But like I said, right, they have the masses will do one thing and they would drive price the other way. So an example of that is, let's say for example, let's say this is right here. All right, so let's say this is right here, for example. So y'all see how this is on an uptrend? Make this orange. All right. So y'all see how this is going up, and then usually people would think like, oh, it shot down, and once it broke right here, people will be like, oh, this is a sell. This finna come take this out. But in reality of taking this low out, it just continued the bullish momentum and it shot even faster up. As y'all can see, this rejection from this area, this big candle right here. This could be an institutional candle also. Let's see, this one right here. Look at this. This is not normal at all. This is not normal at all. That is manipulation from the banks, from the market, from the market makers. As y'all can see, that is a 50 pip move in 15 minutes. That's not normal by any means. 15 pips and 15 minutes, bro. That's like GBP JPY on AUD set. AUD chef is one of the most slowest pairs. Like no cap. And think about that, right? That's one of the biggest candles, even on the 4-hour, bro. Like, so when market came in this area and it rejected quickly, I knew, okay, the banks must be located in this area because, like I said, this was a very impulsive move to the upside and very, very strong. So that's why I got my entry right here because I'm like, okay, if I know the banks are somewhere in here, I'm going to get the most logical, well, not logical. I'm going to get the most I'm gonna get the most, how can I say it, like, basically, y'all know the saying, right? Buy low, sell high. I'm gonna buy at the most lowest point that makes sense. I'm not gonna buy down here because I don't see no, there's volume right here, but it's not the equilibrium of the institutional candle. Equilibrium is somewhere where I got my entry at. That's more so institutional candles, breaking those down and stuff like that. But like I said, right, I got in at the most lowest premium, which is 88.6%. If you want to use a fair retracement, bro, this is OD. Like, if you don't want to, practice precise entries and stuff. I like getting sniper entries myself, so that's why I do so. But if you just want to do the basics, man, fair retracement and then copy these numbers that y'all see here, 100, 88.6, 78.6, 71. 50%, that's equilibrium. 0, that's basically where you want to start your swing from. I mean, where you want to end your swing from. So the swing started here and it shot up. So it ends here. Same thing for downtrend. Right? You know, it started down here and it ended here. This will be a downtrend. So it will look something like this. Market will shoot. Oh yeah, I drew that wrong. Hold on. It's got to be a little bit more further. Right here. Yeah, boom. So it'll be something like this for a downtrend. So yeah, like I said, man, with that being said, that's pretty much what smart money is, in the sense of you getting an entry off of a premium level and then riding that wave up. So right now what I'm looking to see is I'm looking for this liquidity right here. Like I said, right? Institutional candles. We had that right here. Supply and demand. I believe I was just watching a video about this yesterday because I always like to study and I always like to, you know, improve what I have going on, sharpen the iron. But I believe this is called a supply zone. If I'm not mistaken, I think this is called a supply zone. And then this is a demand zone. Or it's flipped. It's something like that. Like I said, I don't necessarily call it that, so I don't know the term for it. But as y'all can see, these big candles right here on the 4 hour, how it's very like, it's a very solid candle, not much wick on it on 4 hour. So yeah, supply and demand. Then we have order blocks, which is kind of that's what I'm saying. It's all sounds the same to me. I don't know exactly what the difference is, but I use, like I said, I use liquidity and I use institutional candles. These other two, I do not use like that. But there's liquidity up here. There is liquidity above this high, of course. Let's see. Liquidity above up here, but that is a little like slanted. So like, there's liquidity up here. So liquidity is basically just where money is in the market. So liquidity is just money in the market. So like I said, man, I'm looking for this to break this this structure right here. So once price shoots up and it breaks this structure, now I can possibly see a flip coming where it'll come down. It'll do something like this. That's what I believe. Something like this, and then it just keeps going up. And then, you know, obviously market has to trend up there. But yeah, this is what I see happening. All right, GA is a sale that I have going on. Same thing. It was on a downtrend. I used this institutional candle in here. Let's go down to the 15-minute time frame. I believe it was. Yeah, 15-minute. Oh no, I think it was 30. So yeah, I used this candle all the way to the high of this candle, and basically I'm just riding the trend, and it shot up there, violated the 50%, but it still shot down, and now it's around this area of supply. So if it breaks the supply zone and it keeps going down, then I see a reason why it should take out this liquidity down here, this liquidity, and then we have a higher time frame liquidity on the daily time frame all the way at the bottom. So basically like equal lows. And what they do is they usually just push out false information to people so they can believe like, oh, if this happens, you should buy right here again because it happened last time. So in reality, what they're doing is they're just going to push it up to then, boom, take it out because there's liquidity. There's money down here. People's stop losses are down here. You know what I'm saying? So yeah, that's pretty much why you should trade with the banks. Is basically you're a small fish. I think they're called femoras. You're a small fish on the shark. Small fish on a shark. This is an example I want to give y'all, right? Because it's how I look at it. So basically, these small fishes is investors like me. You know, do it from the phone, do it at home, learning how, learning as they go and stuff like that. Really don't have that much money to play with. However, the sharks are the banks. So the sharks, the banks are doing all the work. All I'm doing is just following the trend with them. Wherever they go, whatever they don't feast on, I'm gonna pick up the scraps. You know what I'm saying? That's just how it go. So that being said, I'm gonna see where these trades end off. You know, for the week, I done caught around 111 pips on GA, and currently on AUDCHF I only caught like 33 pips. So like I said, man, we're gonna see where it's at the end of this week. I appreciate y'all for watching this video. Hopefully you learned something new. But yeah, man, y'all keep attacking these markets for every single trader out there, man. Y'all stay safe. DHS out. Gang.